AAVE is a platform for borrowing and lending cryptocurrencies that is mostly based on the Ethereum network. You can borrow coins and pay interest, or you can deposit your tokens and earn interest. We go over the history of AAVE, how it functions, and why you should think about utilizing it as one of your decentralized finance tools. Hello, and welcome back to Metaverse. In this video, we are going to explain what AAVE is. Let's get started. You know how you get a really good car even though it's a little too expensive to buy? You need to obtain a loan from the bank in order to do it though. You let them know that until you pay off the debt, you can keep the car's title. In this manner, they might come and take your car if you default on the loan. What if you're preparing to purchase your first home? For majority of people, a mortgage is undoubtedly necessary. You make a 20% down payment in order to be able to borrow the remaining 80% and pay it back over time. Banks provide the funds for the house and the car, respectively. They lend you money with understanding that you would pay hefty interest on it, and they pay their lenders the interest. Of course, the bank also keeps a portion. The cryptocurrency equivalent of that bank is called AAVE. What is AAVE? With the help of the decentralized financial application AAVE, users can lend and borrow bitcoins in return for interest payments and other costs. In essence, AAVE is peer-to-peer lending with cryptocurrency serving as the traded asset. However, AAVE matches lenders with borrowers and calculates lending rates using an algorithm. Additionally, AAVE has an accompanying AAVE token, an Ethereum token that supports the platform's governance. In essence, the concept behind this token is that token holders will have the ability to vote on future modifications to the program. A group of programmers was building something called ETHLend. They essentially developed an MVP platform that manually linked lenders with various borrowers. The lenders had to wait for the borrowers before meeting them. Liquidity, or the amount of money in the system, and account matching borrowers and lenders were two major issues they encountered. So they revamped ETHLend at the beginning of 2020, resulting in AAVE. The developer claimed that shifting their product was made easier by the bear market in cryptocurrencies. To run the platform, AAVE makes use of smart contracts, which are merely segments of code that are executed automatically in response to particular conditions. Peer-to-peer smart contracts were employed by AAVE. As a result, lenders might make a deposit into a smart contract and get interested. Additionally, borrowers might choose any smart contract to borrow from by depositing their collateral into another smart contract. Based on the amount of liquidity in each smart contract, they applied new algorithms in the smart contracts to calculate the lending rates. That was incredibly weird, but AAVE is a Finnish term that means ghost, by the way. Given that lending or borrowing money is always done in an anonymous manner, they decided to stick with this for branding purposes. Nobody else can see what you're doing, no banks regulate it, and notably, you have no idea who is on the other side of that smart contract. Thus, it is how AAVE came to be. How does it perform? Visit app.ave.com markets to view the current borrowing and lending rates. For instance, USDT or Tether is providing a quite good bargain, and you can also see that Ethereum is providing a fairly cheap rate. This is due to the fact that whereas Ethereum is now quite volatile, Tether is a stable coin and its price won't fluctuate much. Borrowing follows lending, so you lend your cryptocurrency to AAVE and they pay you interest on it. But borrowing also comes with lending. Therefore, you have the option to borrow money using some of the cryptocurrencies that you have deposited with AAVE to earn interest. Loans over collateralized. Every time you borrowed 80% of the home's worth to make mortgage payments, the house served as security. This implies that the bank would simply evict you and seize your home if you were unable to repay the debt. In other words, if you don't pay them well, they can take the collateral you gave them. You need to have more collateral than you need if you want to borrow cryptocurrency. This means that if you wish to borrow $100, you must deposit an additional $120 with the bank. You could consider this absurd if you were most people. Why on earth would you lend someone money that you already have, especially if you don't need to? Now consider the following scenario. Suppose I handed you $100 worth of Ethereum and you lent me $80 worth of Tether, a stable coin tied to the US dollar. You utilize that 80 for a while before deciding to repay it and obtain your ETH. In any case, the cost of Ethereum has since doubled. You sell your 100 Ethereums for $100, but because Ethereum's value increased, you actually receive $200. This has a downside too, because AAVE has liquidation threshold, after which they will sell your collateral to pay off the loan you have established. Investors never experience a loss in this way. As an illustration, suppose you put up $100 in Ethereum, and the maximum loan to value of Ethereum is 80%. This means you can borrow 80% of that $100. Therefore, you borrow $80 in Tether, and AAVE will automatically take your Ethereum and refund the loan if the price of Ethereum drops below 82.5% of its worth, which is the liquidation percentage. The $80 you borrowed, nevertheless, is yours to keep. Applying for AAVE is a highly leveraged position, or borrowing on steroids, can be created. Let's imagine, for illustration, that you have $100 worth of Ethereum. You add Ethereum to AAVE and take out USDC, an Ethereum stable token, in the amount of $80. You take the USDC that is worth $80 and travel to Uniswap to exchange it for additional Ethereum, which you then deposit back at AAVE. As a result, you have now placed an order for 180 Ethereum, but you can still withdraw 80% of that amount, or 64 USDC if you like. Then you take that $64 USDC, exchange it for additional ETH, and add it back to your AAVE account. You have borrowed $244 worth of Ethereum as a result. Even though your initial investment was only $100, if the price of ETH increases by 10%, you make a profit of $24.40 instead of the $10 you would have made without the leveraged position. If you are above the liquidation level, you're out of luck, though if the price of Ethereum drops. How will you make your loan payments? In actuality, you contributed more than 100% toward the loan. All you have to do is occasionally log in to AAVE and make a small loan repayment. Unlike traditional loans, which must be fully repaid by a specific date, AAVE loans have no such deadline. When must the loan be repaid? There is no set time limit for repaying the loan, as stated by AAVE. You can borrow money for an ambiguous amount of time as long as your position is secure. However, they claim that as time goes on, the interest will accrue and your health factor would decline, thereby increasing the likelihood that your deposited assets may be liquidated. AAVE offers cold flash loans. They have a brand new function that is actually one of their key selling points. With a flash loan, you may borrow up to millions of dollars in Bitcoin without having to put up any security. The drawback is that you have to repay a flash loan in the same Bitcoin block that you borrowed it in. Why would you require a loan that you must repay nearly instantly? Let's imagine, though, that you could purchase Ethereum at Binance for $1 and sell it to Coinbase for $1.01. You would get a cent each time you accomplish that. This is an example of why you would want to take out a flash loan even though you'd have to pay it back in about 13 seconds if you use the Ethereum network. Imagine if you used millions of dollars to accomplish it in millions of times. What is your reaction to our video about the AAVE? Did you get an idea of how it works? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to our channel Metaverse for more videos like this. Thank you for stopping by to watch. See you again in our next video. Bye!